Well guys, in today's video, I got an exciting one for you here today, okay? We're gonna talk about where I might put $250,000 next in the stock market. We're gonna talk about some different stocks in this video. We're even gonna talk about options a little bit, okay? I don't talk about options that often on the channel. It's actually, very few and far between. But in this video, we're actually gonna talk about some option positions I'm thinking about opening up out there, okay? I would like to invest $250,000 into the stock market over the next 1 to 2 months, okay? Why? Well, my cash piles are too high right now, okay? And basically, I've already bought a lot of real estate this year, and I've been buying a lot of stocks, but at the same time, I feel like I have a little too much cash for me. I like to always have cash around, but right now, it's too much cash, and I see some opportunities out there, so it's not like I'm just saying, oh, I got too much cash, I gotta go spend it somehow. There's actually some real opportunities out there in the market in very specific stocks. I can tell you a lot of stocks in the market right now are ripoffs, okay? Just flat out. But there are definitely some deals out there, and that's what I enjoy finding. I'm trying to find the stocks that are 2x and 3x and 4x and 5x and over the next 3, 5, 7 years, okay? Now, why can't I have too much cash, okay? Is there ever such thing as having too much cash? Absolutely, okay? Jay Powell, okay, that man and his money printer, well, it's not really his fault. It's the whole US government and the whole system of money and all those things, okay? Basically, your money is being devalued each and every year, okay? Your dollars are going to become worth less and less and less over time. This is just the way it goes, okay? The dollar becomes worth less and less over time. Your buying power does not get you what it used to get you. Let's put it that way. And that will continue forever and ever and ever. So if you had $100,000 50 years ago, that was amazing, right? You have $100,000 today, it's like, oh, good for you, okay? You had $1 million 50 years ago, it was like you were super rich. Now you got $1 million and people look at you like, oh, you're doing all right for yourself. Okay, cool. It's just different. It's just the way it is. And you think about having cash, like even if you put in a savings account, right? Or CD account, they're all pretty much trash. I mean, they're all pretty much trash. I mean, here you are in a situation where everything generally gets more expensive over time and you're stuck with savings accounts that are paying you less than 1% on your money, right? And CD accounts that are just a complete joke, they're all just trash. So at the end of the day, it's always nice to have some cash around. It allows you to take advantage of dips in the market, dips in particular stocks. But for the most part, if you have too much cash, it's a bad thing, believe it or not, okay? And I know this is, it sounds like, man, I would love to have too much cash. Yeah, until you have too much cash and then you realize your cash is being devalued and everything else gets more expensive over time, okay? Stocks and real estate, that's where I always like to have the majority of my money invested. What happens with the stock market over time? It goes up, okay? Oh, good stocks. What happens with good stocks over time? They go up. They become more and more valuable over time. Good real estate properties. What happens with good real estate properties? They go up and up and up in value over time. You can get more and more rental income from those properties over time, okay? This is why, having your money in great stocks, having your money in great real estate properties, that's where you want your money, not in cash sitting in the bank or under your mattress because, man, that's just going to continue to go down and down and down in value over time, okay? So let me know what stocks you guys are planning on buying for the rest of 2020. I would love to hear from you guys in that comment section. Give me some in-depth comments if you don't mind. Pitch me on some stocks. Sell me, okay? Sell me something. I would love to kind of read some in-depth responses and some comments down there on why I should buy this stock or that stock. I always enjoy kind of reading through some of those bull theses you guys have out there. So yeah, feel free to share. I'll definitely be going through the comments on this video. If you don't mind, smash the thumbs up. That helps the YouTube channel out in a massive, massive way. I appreciate each and every one of you. And also, if you're looking to learn directly from me on how to make more money in the stock market while taking less risk, fill out the application linked in the description down there. First link, okay? First one up here where I'm putting $250,000 is Tesla stock. Okay, no, I'm just kidding, okay? I mean, it is battery day to day, and you guys know I love Tesla, but I'm comfortable with my position, okay? I got over 300K in that stock. I'm comfortable with where I'm at with Tesla. You never know, maybe I could buy more Teslas someday, but not right now, okay? Not right now, although I do love that stock. What I am gonna buy is $250,000 worth of call options in Nikola Corporation expiring at the end of this week. No, I'm just kidding, okay? No. Although that could be a pretty aggressive move, okay? Let's get into the serious ones, all right? Dropbox, ticker symbol DBX. I love this stock, okay? Anywhere around where it's at, I love this stock right now. I think this stock is going to be a big money maker for me in future years. Let's put it that way, okay? Company with an $8 billion market cap. By the way, it's a cloud company. A lot of small businesses and mid-sized businesses use them, as well as just some regular consumers who don't have businesses, but their real market is small and mid-sized businesses. Okay, I've been using Dropbox as a loyal customer for probably about 5 years now or so, and love the product, love the service. I plan to continue to use it for years to go in the future, and the stock price is really attractive, which is why I started buying it very recently and why I'm interested in buying more, essentially. Okay, $8 billion company, like a 22 forward P. That is so like ridiculously low. I can't even explain it to you guys. Okay, a 22 forward P for Dropbox is a joke. This is a company that will likely grow double-digit revenues for years and years and years and years and years and years and years into the future. Okay, this is a company that has recurring revenues. Okay, people are on their cloud products like myself, right? And they're charged, well, it depends. Some people are charged monthly, some people are charged yearly. It's a recurring revenue stream that's very solid, a fairly low churn rate. And for somebody like myself that has 1-2 terabytes of cloud data out there, Dropbox does the job just perfectly fine for me. And that's their business at the end of the day. And so this is a business that's going to continue to grow. They're trying to grow the business into new spaces as well, including not just cloud, but other spaces as well, including smart workspaces, collaborative tools, things like that. They bought out HelloSign very recently, which is a whole new growth vector for the company. And so there's just so many things that are exciting for Dropbox for the next 5-10 years. This company should be able to grow massively over the next 5-10 years. I think this will easily be a stock that doubles up my money, if not a lot more than that over time. So I'm super pumped about Dropbox. Needless to say, it's a PEG ratio of 0.95. Keep in mind, anytime you're getting a PEG ratio under 1, generally speaking, especially if it's a company that you believe in for the long term, it's a good deal, okay? And if you're talking about 1.5, if you're talking about 2, sometimes that's not such a good deal unless the company has crazy, ridiculous growth in front of it. But at a 0.95 for Dropbox, I think this is one of the most disrespected stocks in the stock market in terms of Wall Street overlooking it, just because it's not AWS and it's not Google or something like that. And it's like, there's a lot of, this is a massive market. There's a lot of players that thrive in this market. It's not like it's just big dogs and no one else thrives. Like Dropbox will continue to thrive and grow into a much larger company in future years. A 4.5 price to sales ratio for this industry and for the type of growth Dropbox has in future years is way too low in my personal opinion. When you're thinking about Dropbox, remember, this is a company that back in 2014, 2015 was valued in the private markets at $10 billion, okay? $10 billion. Now, it had probably gotten a little overvalued at that particular time from where the company was at, and, but here today it's $8 billion. I mean, just any metric you look at for this company, it is way undervalued. And this should be one of those stocks that, goes up massively, kind of on the DL over the next few years, in my opinion. And sooner or later, it'll be a big enough company where everybody will start talking about it, respecting it. Look what Dropbox is doing, and, it'll be one of those stocks that is talked about on CNBC and different networks all the time. So yeah, I'm really looking forward to this one. An analyst came out very recently and said this, and I gotta say, I definitely agree with it, okay? Said file sharing service Dropbox has plenty of upside potential coming ahead, according to RBC Capital's Alex Zuckin. He reiterated his buy rating on Dropbox post earnings with a price target of $30, suggesting shares can surge over 50% from current levels. This analyst move just came out about a month ago, okay? For the quarter, Dropbox posted solid 2Q beats on revenue and paid users, highlighting by accelerating ARR, annual recurring revenue growth, and while average revenue per user trailed consensus, this was driven by a large deal activity, a positive in Zuckin's view. Looking ahead, 3Q and calendar year 20 outlook came in ahead of consensus and appears conservative. He says, quote, "We view underlying business as healthy and the company remains on track to deliver material margin expansion through calendar year 2024. Okay, we're talking way out. The analyst told investors on August 7th. He believes Dropbox is undervalued on both a growth adjusted basis and absolute basis and sees a potential for additional strong quarters to change the narrative. I'm 100% in agreement. I think this stock is going to be, oh man, I don't want to say easy money, because that's a dangerous thing to kind of throw around, easy money. But man, it's close, okay? It's pretty dang close, okay? Next stock up here that I'm interested in potentially buying some more of is JWN, Nordstrom, okay? I would love to throw some of the $250,000 in this stock. I wouldn't throw a pure $250,000 in the stock because it's too risky, but could I buy, $20,000 to $50,000 worth of shares of stock over the next month or two? I could. Here's what we're looking at with Dropbox. This is a stock that will either be $0 or $30 in 3 years, in my opinion. There's really no in between for this company, okay? There's no in between. It's either the entire economy gets shut down again, no one will loan Nordstrom money, and they go out of business, or the economy doesn't get shut down again, and if Nordstrom does need to take out any loans, which I think they would be able to get access to capital, they've proven they can in the past, and things open up more and more, this is going to be a $30 stock in the future. Right now, people aren't buying clothes. There's nothing to go to, and that's what people buy clothes for, okay? People buy clothes to go to school, and go to work, and go to a formal event, and this and that. People aren't doing that right now because there's nowhere to go. This is just the way it is right now in the world. Okay, and so 2020 is probably the worst year. It is the worst year in modern history for clothing sales. Okay, which means there's going to be a lot of upside 2021, 2022, 2023 for, guess what? Clothing sales, okay? In my opinion, that will be a very positive thing for Nordstrom. So as long as they make it through this mess over the next 6-12 months, this will be, in my opinion, a $30 stock in the future. And if it doesn't, then it's because the economy closed and they couldn't get, no one would loan them money. I mean, the Wall Street's basically kind of pricing this one they completely don't believe in it. It's $2 billion. Are you kidding me? $2 billion for the entire Nordstrom company with Nordstrom Rack, Trunk Club, their online business, which is expanding quite rapidly right now. All of that, $2 billion, come on, man. And when you look at this stock, here's where I think the valuation gets really, really intriguing. I mean, this stock's pretty much at its 52-week low right now. I mean, you go back to April 1st, kind of when the market was right around its bottoming area. I think it bottomed just before that, right? I mean, even back then it was a $13-something stock. It's $12 or so here today. This is a stock that just Wall Street doesn't believe in. Investors don't believe in right now. And we'll see what happens with it over the next few years. But it's a very interesting risk reward if you have some capital, somebody like myself, that you're willing to take that type of risk because you can potentially 2.5 to 3x your money in a matter of a few years. I'm also looking at potentially call options for Nordstrom. I'm looking specifically at the Jan 2023s. If you didn't know, January 2023 options just came out very recently, okay? And so those are the ones I would be personally looking at. Something like a strike price of $10 to $15 range, that's what I would be looking at. Something, erring a little more to the side of caution just in case the stock doesn't go down, up to $30 plus over the next few years. Maybe it only goes to 15 or 20, something like that, right? But I need the premiums to come down a bit, okay? Basically, if I am to buy the $10 strike prices for Nordstrom stock, I really want it in the $5 to $5.50 range, okay? That would be nice. That would put my basically break even right around $15 a share, and then every $5 up from there, I basically double my original investment. That would be attractive, okay? I'm also looking at a $15 strike, but if I go for a $15 strike, I really want it for $3 to $3.50. Right now, I would have to pay somewhere around $4.60. So I need basically those premiums to come down a bit. If they don't come down, then I'm not buying them. If they do come down, I'm probably gonna buy them, and I will be willing to take that risk because, the stock market is one big game of risk reward, right? At the end of the day. And when I get these type of opportunities where I see a company that I don't think is going to go under, I think there's a pretty good probability they're going to make it through this mess. And as long as they make it through this mess, this is going to be a $20, $30, maybe even a $40 stock again in future years. That's where it gets really dang attractive. And remember, this was a stock literally that if you go back to, prior to Roni taking off, right? This was a stock that was $35, $40 a share. So it absolutely can go back there over the next few years, in my opinion, as clothing sales bounce back. The main thing I think is hurting this stock right now is the whole fear out of Europe. Are numbers going up? What if they shut down the economy? Does that mean the US will end up shutting down the economy in a few months again? I think that's why this stock has continued to see weakness, because just at the end of the day, investors are scared. What if the economy is shut down again? What's that mean for Nordstrom, okay? This one's a boring stock for me to buy, okay? WBA, Walgreens, it's just valuation. It's a 7.4 PE. I mean, it's just, there's nothing else I can really say about it. It's a really boring stock for somebody like myself to buy. You guys know I'm a little more into the growth stocks, but dang, man, I mean, are you going to throw me Walgreens at a 7.4 PE? I got to buy a little bit, I got to buy a little bit, okay? Lemonade. So Lemonade's a stock I've been doing some work on recently. A lot of requests for this one. And so I have been doing some research, and I really like what I'm seeing at Lemonade, okay? The company itself. Let me be very clear about that. The underlying company, I like what I'm seeing. Where I have an issue with Lemonade is, dang, man, that valuation is rich on this company. Company has huge potential long-term opportunity, no doubt about that, okay? Insurance business is a massive market. Lemonade's in the insurance business. They have an app, and just the whole business approach from Lemonade, it's just so much better in my opinion. The trust levels they get from their client base is just so much better than traditional insurance companies, which, most people hate traditional insurance companies. I feel like, people really like Lemonade. Like, for instance, if they make too much off you, then essentially they throw those proceeds to charity of your choice. Like, it's a different experience, I feel like, in a massive way than anything else in the traditional insurance business brings. But the $3 billion valuation is, what's kind of giving me some pause right now. I mean, if this was a $1 billion market cap, I'm probably already buying the stock. $3 billion, I'm like, I got to relook into this and relook into this and relook into this because, we're talking about a serious valuation and a price to sales ratio of 28. I mean, that is high, okay? I don't pay, price to sales ratios of 28 almost ever, okay? That's incredibly high. And kind of the other troubling thing I will say with Lemonade, although I like the underlying business model a lot, and this goes back to the valuation, things like that, it's a company that's only expected to do $105 million in revenue next year. And that would only be 20% growth roughly, right? And so I look at that and I say, that's just super disappointing. Like, I feel like this is a business that should be growing 40% plus a year for the whole decade, essentially. Like, I think just 20% growth is just disappointing, okay? Especially when you're talking about a stock that is valued the way Lemonade stock is valued, okay? So I really, really like the underlying business model. I really like that CEO over there. I really like what they're doing, the focus, the long-term opportunity, but the valuation at $3 billion for a company that's going to do a little over 100 mil next year and maybe only have 20%. Let's say it even came in with 30% growth. I think that's disappointing for the valuation this business has on it. You've got to grow faster than that, okay? I got more work to do there on Lemonade if I'm going to buy that one, okay? BigCommerce. This is a new company I just started looking into very recently. Went over a friend's house in Arizona recently, and he works in a space that basically they use some of these different companies, and he's very familiar with Shopify and BigCommerce and many different companies. And he was telling me about this one, and he was basically hyping it out like nobody's business. He's like, they got a better product than Shopify has. And I thought that was really interesting, okay, that he was willing to, say some things like that. And he was like, yeah, they got a better product than Shopify. Like, that company's going to be massive in the future. And so this is one I've got to do a lot more work on of this list. Like, this is the one I'm probably least likely to buy or put any other $250,000 in because, this one, like I said, it's just like I'm like in the baby steps looking into this one. But I can tell you the valuation is extremely rich. $5 billion market cap. 38 price to sales ratio. That's insane. So I'm not sure I'll buy this one, but I have to at least look into it because I'm telling you, my friend there, he was hyping this company out like nobody's business, and he knows, these companies very well because he works in that industry. And this one kind of reminded me of Lemonade in a certain respect because the valuation's massive, right? 38 price to sales ratio on this one, and this was kind of disappointing. I was expecting some crazy growth. 18.8% growth expected next year. Like, that doesn't even make sense. Like, that's just horrible growth. For a company that's valued at almost a 38 price to sales ratio, if you're only growing revenues next year 19%, that's an L. So I don't know. Maybe analysts have this wrong. Maybe, this is inaccurate. I don't know what is going on there, but I'm gonna have to look into this one more. It deserves my attention just for the mere fact that a friend hyped this out like crazy to me, who's in the industry and knows these type of companies very well, and who generally knows kind of what's going on in this space. So gonna look more into that one. We'll see, okay? USO. So USO, this is one I played back several months ago, made really good money on it. It's the only like pure oil play I've been in a long time. And USO, basically this is an oil fund, okay? It's not like an oil company that like just drilling for oil or something like that. Basically they're buying contracts that are, several months out, and basically if oil price goes up over time, generally speaking, what's gonna go up over time? USO's price, okay? And so when I'm looking at USO, oil prices have stabilized over the past several months, and I got out of this one, made really good money, and now I'm looking, and basically since I got out, oil hasn't really done anything, to be completely honest. It's just stabilized. And so I'm looking at this one, and I'm interested, and here's why. Oil, in my opinion, in terms of demand, is going to start bouncing back in a real way in 2021, okay? And going into 2022. I think oil is going to bounce back more and more. Why? Because demand's going to go up, okay? Travel will start coming back in a real way. Some people are traveling right now, but let's be honest, it's very few and far between compared to what's usually out there, right? Some people are traveling for work, but it's less than it would usually be, right? And that's just how it's going to be for the rest of this year. I think 2021, you'll start to see more and more oil be used out there for different things. And so demand will start to bounce back. Supply hopefully will be, still constrained. Guess what? It should end up happening more than likely. Prices should go up. USO should prosper as far as the fund goes because those contracts should become more and more valuable that they were buying. So yeah, I'm looking at USO and I'm very interested in USO. That one remains to be seen if I buy back into that one, but I might go to that well once again, no pun intended, all right? Next stock up here is Slack, ticker symbol WORK on this one. It's a $15 billion market cap company. As you guys probably know, it's a collaborative tool that basically a ton of businesses use out there. Small businesses, mid-sized businesses, large enterprise companies, right? They really only have one serious competitor in this space. It's Microsoft Teams, and that's pretty much it, okay? Everybody else in this space is just non-existent. So it's a massive market. Every company in the world, likely in the future, is going to either use Slack or Microsoft Teams. Who wins, who loses, we'll see what happens over time. But regardless, we're talking about, there's a lot up for grabs in that space, all right? And when it comes to Slack, this is a company growing massively. They grew revenues in the most recent quarter 50%. 50%. This is a company in massive growth phase. This is one of the faster growing companies you will find in the stock market. There are not many stocks that are growing revenues 50%. And this company should grow, revenues 30+% for years to go in the future, all right? The company has not seen a change in its win rate or loss rate against Microsoft. I think that's actually a really good thing. Competing against Microsoft's tough. It really is. And Slack and Microsoft are in direct competition. And so in my opinion, that's good if they can just kind of stay basically kind of even in that whole situation. So I really like this company, its long-term future, where the valuation's at. I would love it for cheaper, but heck, I would love every stock for cheaper than it is, okay? Kamoth, he's a brilliant investor, okay? Kamoth is a big Slack investor. He believes a lot in the company. I was finding some, recent posts from him that were quite interesting. This one was from his Twitter page on April 7th, kind of around, Slack versus Airbnb and kind of comparisons there, things like that. Slack, price maker, Airbnb, price taker, okay? Pretty interesting, okay? But I thought what was much more interesting is what he actually said last year about Slack. He says Slack is the only company in the world that looks like Facebook did as it was growing into the social media behemoth it is today. Former Facebook executive and Slack board member Kamoth said in an interview on CNBC's Halftime Report Tuesday. This was last year. He said this, okay? Slack CEO Stuart Butterfield, quote, understands the product to a level of sophistication I have not seen since Facebook. And by the way, Kamoth, before he was an investor, he had previously led user growth at Facebook and is now CEO of Social Capital. He says, quote, when I was in the bowels of Facebook building that machinery, what I saw was a team that really understood product market fit and the power of network effects and why that created an incredible subsidized business, a thing that could expand all over the world at marginally zero cost. The only company in the world that looks like that today that is not already public, and by the way, it is public now, okay, is Slack. And soon it will be, and obviously Slack did go public. So, Kamoth believes a lot in this company. I believe a lot in this company. We use it in our business, and obviously a lot of people are going to use Microsoft Teams. A lot of people are going to use Slack. Some people say, Microsoft Teams, I like that better, blah, blah, blah. Some people say, I like Slack better, blah, blah, blah. Opinions are opinions. Regardless, at the end of the day, neither one of these companies is winning 100% market share. We're talking about almost every business is going to use one of these two companies. How is it split up? Is it 50-50? Is it 60-40? Is it 70-30? Is it 80-20? We'll see what happens over the long term, but I think Slack's going to be a tough competitor for Microsoft, and I think Microsoft will be a tough competitor for Slack. But at the end of the day, we're talking about huge long-term potential, never mind products that Slack launches over the coming years. Because if you think all they're going to do is what they have today, I think you're mistaken. They'll continue to expand that business into other verticals and things that make them more relevant than ever, okay? Wynn Resorts January 2023 call options I am looking at, okay? Wynn Resorts, by the way, is a stock I own. I own the stock directly in at least a couple different accounts, and I really like Wynn stock. I always love Wynn stock in terms of the way the company's run, competing at the high end of the space in gaming, resorts, things like that. But I'm really looking at this one for an option play for January 2023. And it's specifically what, strike prices am I looking at for Wynn Resorts? I'm looking at $80 strike price, okay? I want them under $20, okay? Here's what I think. I think Wynn's, I don't have any fear at all that Wynn's going out of business anytime soon, unless, I don't know, the economy had to be shut down for years or some ridiculous, thing like that, okay? So I don't think Wynn's going anywhere in terms of that. I think Wynn's gonna bounce back over the next few years. I think Wynn's gonna be 100, 150, maybe even a $200 stock a few years from now, okay? And so I'm looking at $80 strike, and I would like to pay under $20 in terms of the premium. If I could get that, then that would essentially mean my break even is, let's say around $100 or less than $100. For me, very attractive. That would be very, very attractive. That would definitely make me very excited about this one. So I'm looking at Wynn Resorts in terms of those calls, and I would love this. Here's what I see happening here, okay? If you don't know, Wynn Resorts, by the way, they have property in Las Vegas, several properties in Las Vegas, 2 properties. They have 3 properties out in Macau, okay? And they have 1 property in Boston. Q3, Q4 2020, we're basically getting the early folks to get back into travel, okay? These are people that don't really care about, they have no fear about getting anything in terms of the Rona. And if you come to Vegas, okay, you come to my city, and you go on the strip on a Thursday, Friday, Saturday night, it's busy. It's actually busy. It's not like as busy as it would usually be, trust me on that, but I can tell you it's not like it's a ghost town down there. It's actually busy. We're actually getting a lot of traffic, basically to Vegas. It's mostly drive-in traffic, folks from either, mostly California, some folks from Arizona, Utah, Colorado. But there's a lot of actual drive-in traffic here in Vegas that's doing pretty well. Macau is starting to bounce back slowly but surely, okay? And so we're getting a lot of those early folks kind of coming out and, kind of basically doing some business. Let's just put it that way. I look at 2021 as the big growth year over 2020. I believe every single month after February of 2021 will be huge growth year over year, okay? And I think it's just gonna, get a lot of people really excited about, Wynn Resorts and basically any stocks that are playing in the Vegas space, the Macau space, because the growth is gonna be pretty epic in my opinion. Once again, assuming the whole economy doesn't have to get shut down or something like that again, which, let's hope that doesn't have to happen because, if that happened, then, man, Roni went crazy again or something like that, okay? So huge growth over 2020 coming in 2021. And I think 2022 is that year of more of a return to normal. I think Macau numbers will have, increased dramatically. I think Las Vegas numbers will have increased dramatically. I think the convention business will be coming back to Vegas in 2022. I think some convention business will come back in the back half of 2021 in terms of Vegas, which is really exciting for the weekdays because the weekdays are still, very dead out here. Let's just put it that way. Mondays, Tuesdays, Wednesdays are not very busy. So once that convention business comes back, the weekdays will get stronger and stronger. I think we'll get back to a return to normal, okay? I'm looking at the Planet. I'll be honest, I should buy more Planet. It's $3. It's gone up, it's over doubled up since I bought in this stock. And at the end of the day, I should be buying more of the stock. There's just no other way around it. There's too big upside, I just have to bite the bullet on that one. I just have to buy more, just flat out, okay? GrowGeneration Corporation. This is a newer stock I'm just started looking into literally last night. And it's exciting, guys. They play in the MJ space, ticker symbol GRWG, a 61.4p on this company, massive growth. I'm talking crazy growth for this company and a huge long-term opportunity in front of this company. So I need to do a lot more work on that stock before I buy into it, but I can tell you, I'm seeing some promising things in that stock so far in my research that I was doing last night, okay? So we'll see what happens with that one. I want to say this, don't ever buy a stock just because I might buy a stock or because I am buying a stock. Always make your own decisions out there. Make sure you're fully looking into these companies, doing everything you need to do. You understand that. If you need help in understanding what to look for in stocks, how to pick great stocks, things like that, go ahead and fill out an application. First link in the description down there. That'll allow an opportunity for you to hopefully get on a phone call with somebody high up from my team, and we can speak to you a little bit about the private group, Financial Fortress, see if you might be a good fit in there. You can learn directly from me on everything I look for in stocks, and even if you're looking for one-on-one coaching, actually from some of my Millionaire students, we actually have one-on-one coaching now if that's something you're looking at. If you don't mind, smash a thumbs up. That helps the YouTube channel out in a massive, massive way, and I appreciate each and every one of you guys doing that, especially when I go into a video like this where I'm talking about, positions I'm thinking about adding. Thank you for watching and have a great day.